Today we are talking about sole proprietorship. And people knows when you are in business, you can be a company and you can also be a non entity type, which is sole proprietorship. Today we're going to explore what are the considerations you should know to have a sole proprietor. You may quickly ask that why people would even want to be a sole proprietor. What's the deal? So there is a lot of benefit for being a sole proprietor. So we'll cover that today. And before we begin, I just want to quickly introduce to you our website, communitycpa.com. And right here, you can make appointment with our folks. And all the people listed here are the partners. So we specialize in different areas, so you can choose us and then get on to our calendar to learn. And of course, we have this silent onboarding with us tab. And if you just got really busy and didn't have time to talk to us during the day, but you want to be our client, you can just go into onboarding with us. And right here, I didn't really show very well on this one. And this onboarding will give you a login. You sign up and then you can start uploading your information to us. And all the talking point we have today, it will be on YouTube channel. So I want to make sure that you know where to find them. Now let's get going. I want to show you what are the important things we have today. Let me bring my webinar slice up. Tax considerations for sole proprietorship. And it is a topic, is a decade-long topics, but it's still important because with our lifestyle change, actually sole proprietorship Schedule C is being used a lot more than before. The reason is some of the works are no longer done as an employee and employer relationship, and some of the companies are farming out their jobs to contractors. So instead of getting a W-2, you're getting a 1099. Then in this case, what you are really facing is you are a sole proprietor. If you don't incorporate yourself and you're just going to use your name and your social security number to operate, you're a sole proprietor. So with that said, I will quickly move through our slides. And this is the book I wrote in 2019 for 8 a.m. 2023. I published at 10 a.m. and we are working on 2 p.m. and every of our book is all about business stories meant to give you a sense of to do a business is not about just start it, and it's also not about just grow it, and it is expansion and it is the legacy of the business. So that those are the 2 p.m., 6 p.m. book I'm talking about. And no responsibility disclaimer. And you know that you want to use information on internet carefully. Just don't take it lightly of what you learn. You learn, you research, you verify, then you adjust. Okay. Now let's talk about what is sole proprietorship. Sole proprietor is someone who owns a unincorporated business by him or her. And did you hear that? It's a or. So it is not by him and her. It is or. So that means if you want to be a sole proprietor, you are a singular. You are just one person. What if you say that I am actually doing the same business with me and my spouse? Then it's not a sole proprietor and you are operating a partnership, right? So just be aware what that means when we say sole proprietor, and report all business income losses on your personal tax return. So what if you're married to your spouse, you file joint return, but you are the sole proprietor and you are the one doing the business? Then you're just going to put your Schedule C on your 1040 because that is what required. On the Schedule C, you're going to have a place to put your name and then your social security number to identify which sole proprietor you're talking about, because between you and your spouse, any one of you could be a sole proprietor. That's why sometimes you see people have multiple Schedule C's in their 1040. Why is it multiple? They have one for the spouse, the other one for the other spouse, Then they have this one spouse had two different type of business, so they had two separate Schedule C. You see, so it is very possible you have multiple Schedule Cs, but knowing that Schedule C always come with another schedule called Schedule SE, self-employment. So that is a tax you need to pay, you need to calculate. So that's why I brought these two together. As long as you have a Schedule C, you have a Schedule SE. And that sole proprietorship kind of business example would be Etsy shop, massage therapist, and a consultant. Those are all good examples of you are sole proprietor. And the benefit of being a sole proprietor, yes, there is a benefit. It is easy to start, and it is simplest, the most common, and the least expensive structure that you could start your business. Let me tell you a real fact. And I started community CPA as a sole proprietor. And because I didn't even know I was starting it until someone brought money in, and then I realized that, you know what, I have a business. I thought I was just doing some good and for the community and it's no big deal. But then until you start collecting money, then you realize you're a sole proprietor, you're running a business. So that is easiest, common. A lot of people got lead into the business because of that convenient, right? The individual has a complete control of their business when they are sole proprietor. So you are the boss and you don't have anybody reporting to you. Some people enjoy that. So I'm the boss and I want to be sole proprietor. And then this Schedule C is the right place for you to be. You can operate under your name, and you also can make a name for your company, for your, I wouldn't say company, for your business activity. And that is called doing business as name, DBA name. Typically, you register that with Secretary of State of your state, and making sure that that name is not going to be taken by other people. You properly register, then your check going out to your client, your invoice will bear the proper business name, right? And with that said, you can tell. So proprietor is kind of easy way to ease into the business world if you are just not sure whether you're really made for that or not. So tax consideration, number one, we have number of those ones. And number one, know that when you have a Schedule C, sole proprietor business on your 1040, you also are possibly getting a 20% of deduction, what we call that, it is the pass-through deduction. And I want to, as soon as I gone through this, I'm going to go to the form to touch up on those points with you instead of me switching around. So I want to show you that where that is. So you see, if you, let's say you made $10,000 business income, net profit, then 20% of that is 2,000. So you actually have a qualified business deduction for 2,000. So you may say that, oh, I know that at the, just reduce my income. Not exactly, because this qualified deduction, this consideration number one, that deduction is actually deducting your taxable income. You recall that before that line is a gross income, right? Your adjusted gross income, which you actually add up all your income and make whatever adjustment you need to make, and you have this. And adjusted gross income got reduced by what? Got reduced by standard deduction or your, the itemized deduction. And also this one is part of that, not part of the Schedule A, but it is also an item that you would deduct because you have a Schedule C. And I don't really meant for you to looking for, oh, where is that for me? And I don't have that. If you use software, your software is smart enough that to calculate that for you. But if you want to know exactly where that number is, and I will go to the form and I'll point that out to you. Number two, you report your income and expenses on Schedule C, right? The net income will be taxable to you, regardless you withdraw the cash or not. So that's the name of Schedule C. Schedule C is like whatever you made. If you made $1 million and no, you cannot keep that, saying, oh, I didn't draw it, I just draw half of it, so I should only pay taxes on 500,000. No, everything you made is taxable. So of course, the business expenses you have in there, and it should match up to what kind of accounting method you are doing, right? So if you are a sole proprietor, you probably don't think about what accounting method. You are just looking at your bank goes, I paid $5,000 expense, I made $10,000 income, so my net income is 5,000. Absolutely correct. But if you are in a different kind of accounting method, maybe your expense is not 5,000, maybe your expense is 10,000. So your profit would be zero, right? Those are the things when you are on Schedule C, you will be considering those ones. And I want to show you later on when we look at the form, okay? And then the other thing worth to mention is if you have losses in Schedule C, that directly offset your W-2. Let's say you lost $50,000, but your W-2 is only 30,000. Suddenly you have this hole, right? $20,000 hole negative on your adjusted growth, and you don't even have income. You didn't make income this year, and that 20,000 don't get lost. When next year you make $50,000, even if you closed out your business because you lose so much money, your 20,000 still come out to offset your 50,000 next year. So just know that the losses can be carried forward. And number three consideration is that employment tax, folks. It is not a small amount. Normally when people talk to me about, oh, I have a Schedule C, I made $10,000 profit, what is the taxes I'm going to pay? So assume you're going to pay income tax. That's normal. We all pay income tax. Assume your income tax is 20%, then you're already paying 2,000, right? And your self-employment tax, you can see for 2024, your self-employment tax at 15.3% rate for your net earning, okay? So with that is to say if it is under 168,500. So for me, I want you to just round up the number. So I'm just considering 15%. So you see, after that, you paid your 2,000, that's a 20%. You need to add in your 15%. So that means 3,500 is actually your expense. Of course, if you make more, you're going to pay additional 0.9% Medicare tax. So this whole slide is just to tell you that everything you made in the Schedule C, you're actually facing more than just income tax. You'll pay self-employment tax, okay? Number 4, and you generally must make a quarterly estimated tax payment. What that means is if you are running business on your own and you don't do, your Schedule C, so you don't need to run payroll for yourself, but you would look at your last year's profit, figure out what you need to pay on estimate. So if you owe money last year already, this year you continue to owe, then you get penalty. You get penalized for failing to pay estimated tax. So be sure that to know you have a quarterly estimated tax payment like responsibility. What if you say that, Ying, I didn't make money. I had lost last year. What do I do? Then you don't have to, right? You need to know that you already owed 1 year. Next year you cannot owe. Okay. But if you just coming into the business, becoming so successful, then you need to know that you need to pay estimated tax. All right. So for 2024, these are April 15, June 17, September 16, January 15, due date for you for estimated tax. All right, put aside the money so that way you don't be surprised when we come around to you goes, hey, you have to pay taxes, right? We always tell folks that if you are sole proprietor and your business is growing, if you don't come to see Community CPA, I don't know why you don't. And you don't have to see us, but go see somebody else and also for CPAs. So have them help you because there's ways to help you not pay so much taxes, right? And number 5, you can deduct 100% of your health insurance cost as a business expense. That is a benefit. So you want to consider that. So if you are, for example, if your spouse works in the job and the job doesn't pay a lot of money to the premium, and you are self-employed, and you could be getting the health insurance for the whole family and deduct it all, right? So you don't have to rely on your spouse. Talk about liberty, right? Don't rely on them. Don't rely on the other one. Just be independent. And this means that your deduction for medical care insurance won't be subject to rules that limit medical expense deduction. They're talking about the rules in the corporation. Like if you are a shareholder as S corp and you have rules you have to follow. But here, and your medical insurance is deductible 100%. Number 6, you may be able to deduct home office expense. Why do I say you may be? Because if you don't, home office expense cannot create losses for you. So if you're already a loss, home office deduction will be dormant. It won't be coming out to make more losses for you. But if you have a gain, if you have a net profit, home office deduction will come out. So home office deduction for sole proprietor is so legit. Normally, if you're a sole proprietor, you probably just work from home and do things at home. And I would not imagine you renting, offices in the high-rise building and still sole proprietor. If you're one of those people already renting offices outside and doing things outside of your home, and you're still a sole proprietor, you should give yourself a promotion. And, not just the name promotion. Sole proprietor is a good name, but it's a promotion on tax treatment. All right. So that is the number 6 to consider home office. Number 7, and you should keep complete record for your income and expenses. So important. And the audit rate for Schedule C is triple high. If you think of other entities will be audited. However you think about other entities being audited, your times 3 is not exaggeration. Why? Why is IRS so into audit Schedule C? Very understandable. Because people who just started doing business and just getting their feet wet and understand business, like how I was doing, 20, 30 years ago, right? So at that time, you don't know what you don't know, and you make mistakes, then the IRS is there catching you at an early time so you don't make more mistakes when you become a big business. So sole proprietor, Schedule C, Schedule E is the one the IRS like to audit. So very understandable. And so for that reason, you have a high rate to be audited. You need to keep your record. And if you want to deduct mileage, do you know that not only you need to give out the date, the starting point, the ending point, the total mileage, and the purpose? Not only that, you also need to track your odometer readings. So of course you don't need to track for every trip, but you need to have the beginning of the year odometer reading and the end of the year. So if you're just driving that one car, obviously if we see the difference of the odometer reading, that should roughly adding up to what you claim on the mileage, right? So we had a client claiming mileage, quite a bit mileage, and then got audited. The IRS said that, okay, give me your odometer reading. So of course, our client provided it. The auditor goes that the odometers from beginning of the year to the end of the year only says that you drove 5,000 miles, but you were claiming 12,000 miles, and I don't think that's legit. So our client goes, oh, yes, you're right. I forgot. I changed the car in the middle of the year. I have an old car, but I traded in. I didn't have the odometer reading anymore. What to do? And I obviously I'm honest, and I didn't really. Everything is super accurate. So that happens. And when you are in situation like that, I know you want to ask me, then what happened? What happened? The auditors are very understanding. So the auditor said that I understand that may be the case. And let's just look at this 5,000, and for this period of time, that is matching or not. So it was matching perfectly. So the auditor giving a reasonable doubt and to believe that they did it right. So they still allowed the mileage deduction, but you can tell, how they benchmark those numbers, right? So that would be a consideration for you to keep a complete record and understand what IRS is looking for. Our number 8 consideration, and you have more responsibilities if you hire employees. So of course, when you run your sole proprietor, if you don't talk to your CPAs, you keep on staying as a sole proprietor, then you got a couple employees. Yes, you have a lot of responsibility for those hired employees, and you need to get, a taxpayer identification number, which is that EIN number for your payroll. You cannot use your social security number goes, oh yeah, I have employees, they're working for me, so let me just use my social security numbers to open up a payroll account. No, you would have to apply for payroll taxpayer identification numbers to run payroll. Okay, so make sure you know that. That is why sometimes one sole proprietor business they say that, okay, I'm a sole proprietor, I have this EIN number, can I just elect myself to be a S corp or LLC, whatever they were talking about? We're not sure, because it depends on how you got your EIN number, right? Sometimes you got your EIN number because you treated yourself as a single member LLC. That structure allow you to elect to be other entities. But sometimes you applied for payroll identification number, so that would not allow you to turn that over into other entities. So just be mindful when you are thinking of having a payroll under sole proprietorship, then I would really challenge you that to have a proper tax entity to handle payroll, not under your sole proprietorship. Number nine, and you should consider establishing a qualified retirement plan. That is a reason, because under Schedule C, you can actually put in what you put in your pension plan, put into retirement as a company, as the sole proprietorship entity, not entity, sole proprietorship business match to yourself. So just remember that, and I will show you the line item as soon as we get through this. So audit risk is high. So two things I want to say. Schedule C, audit risk is high for a good measure, and liability risk high for a good measure, because if you borrow money for your business and you are sole proprietorship, if you are ending up not being able to pay that back, you're personally liable. But if you have a sounded business and you borrow money under the business without personal guarantee, if the loan goes bad, you close your business, that's really the end of it. The business can file bankruptcy and you can walk away as a free man, which our president, Donald Trump, has done that many times. So with that said, that is available business tool for you, for everyone. Remember, nobody is special in our country. So whatever can be utilized by the Top Gun can be utilized by people just like you and me. So make sure that you know the liability risk, though, doesn't help you when you are on Schedule C. So you really should be thinking of moving out. That's why on this last slide, I say, when do you consider to move out of sole proprietorship? I want you to engrave this number in your mind, $25,000 net profit. If you're already making $25,000 net profit, there is no reason why you stay on the sole proprietor. And you probably want to ask me, Ying, what is the biggest profit you have ever seen under Schedule C? The person don't move away, stay there. You want to know? 6 million. 6 million. And one of the doctor did sole proprietorship, and the net profit every year, 6 million, stayed on Schedule C, and for reasons. So, it's not to say that people don't stay in there, they stay there for reasons, okay? So, but you want to know that if you don't have a good reason to stay there, or of course, a good reason can be that you want to be audited more often. And if that is your objective, don't move it away. But if that's not your objective, and if you are having more than $25,000 profit, you really should look at moving away from Schedule C. Now, I want to stop sharing here and sharing something else with you. So you are now looking at our YouTube channel, right? I'm sure you're looking at YouTube channel, so the talk will be showing up here, but I want to lead you to this form. This is the one that we've been talking about, for the last 20 minutes. So couple of things I know you are thinking. So you were saying that you mentioned something about accounting method, and if I do this, if I do that, I'll pay less taxes. It's right here under F, accounting method, cash, accrual, and others. Hybrid method is there too. So if you are in trading business, if you're a day trader, you could use Schedule C, but your other method would become a mark to market, right? So, just depends on what you do. But let's say if you're running a retail shop, you want to check accrual method, because when you do retail shop, you buy things first and then you sell. When you buy things, if you didn't pay, and you cannot deduct it if you are not accrual method. You need to be accrual method, then you can deduct the invoices that you have not paid to the vendor yet, so that become part of your expense. It will show up on cost of goods sold number 4. You see, this is let me just make sure that I have colors when I talk to you. So this is the line I was talking about earlier, right? So about accounting method. And this is where that you're paying the vendor, and the vendor payment give you 30 days net. So you can pay, you're selling their things in December, but you can pay them in early February. If you're not accrual, you cannot deduct that because you haven't paid it yet, right? And we also talked about mileage. So this is where the mileage comes in. And if you do your mileage, the number going to show up here. Remember, we talked about how the mileage should be done, and you want to track your odometer reading to make sure. And this is where we talked about the retirement plan. Remember, I was telling you that you can set up your pension profit sharing plan. What is this? These are the expenses company pays for you, but goes to your 401k profit sharing plan or goes to your cash balance plan. Okay, ladies and gentlemen, you don't use that. If you made $6 million, and you bet you will have to utilize this. And if you don't, we help you, right? So this is where I was talking about. Then the other thing, see, this is the payroll. When you want to run payroll, you really have obligations to make sure that you get a new EIN number. See, this here is an employer ID number. This is the EIN number we were talking about. If you have a payroll, don't use your social security number because your social security number is here. Did you see? Did you see me typing the number here? This is your social security number. And if you use TurboTax or something like that, it will carry your name and your number over here. But if you have payroll, ladies and gentlemen, you must have this D filled in. So this is the form that I want to mention to you. But let's go to the other form. I want to show you the qualified business deduction. See, I highlighted right here. This is 1040. So after you fill up the Schedule C, the 1040 will come in. And this 1040 right here, looks like I can expand it bigger. But if you see the highlighted one, this is the qualified business income deduction, 20% of your net profit. So just know that you want to see the line 13. This form is for 2023. So if you do your taxes for 2023 is a line 13, this would come over here. You see that line 12 is standard deduction or itemized deduction. So sometimes the expenses in your Schedule C can also go to your Schedule A, but you're always going to choose Schedule C first. You don't want to leave that on the Schedule A because it's very limited deduction, okay? For example, your health insurance, don't go to Schedule A and you can expense it out in Schedule C. If you go to Schedule A, and then you can deduct fully. They have an income limitation on that. So those are the things I want you to know. And I hope this webinar gives you a clue of what you should do if you are a sole proprietor. And I hope to lead you back to Community CPA YouTube channel, and subscribe to our channel and turn on the little bell, and then you will know what are the things we bring to you. So I hope this 30 minutes is useful for you. I will talk to you again. Bye-bye.